Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome, before we move on to the experts, let's take a look at what's happening. Donald Trump has just arrived in India, so let's just take a look at what exactly is happening there currently.
After being greeted here at the Sardar Vallabhbhai Patel International Airport, the American President, the First Lady, will now proceed towards Sabarmati Ashram. But what will await them on the route, Jasleen, is also going to be fantastic. The cultural extravaganza, music, dance, arts, crafts await the arrival of the dignitaries on the route as the culture of 28 states of the country will be showcased.
So on this short route, President Trump and the First Lady will experience the sights, the sounds, the colors, the culture of all of India on this short journey. The utter joy of the dancers is infectious as they perform the umbrella dance. And the presidential beast, the armored vehicle, will move away from the airport in just a few moments from now.
The tribal dance of Gujarat is a special attraction. Conservation and preservation of the rich culture is so very necessary. The sheer diversity is spectacular. In the background, what you also saw was a glimpse of golf dance, which is known as ribbon dance, where the dancers will hold on to a cord and they will make an intricate braid at the end of first set of movements where it all gets mixed up. But then in the next set of movements, when the dancers move, the braid gets unrevealed and all the cords are loose and single once again. Completely majestic.
We see the presidential cavalcade moving out of the airport, as also the cavalcade of the Prime Minister of India, Shri Narendra Modi. This is indeed a riot of color as artists of all ages, young and old, men and women, dance in gay abandon. And these are 7 or 9 pots that they balance on their heads, which is quite a feat.
These are age-old traditions, offering a story to be told, a narrative that will help us chronicle the history better for a greater future. this is the soft power of India that holds the costumes, the colors, the rhythm, the claps, the dandiya, the garba, the ribbon dance in the background.
In India, we have a dance for every occasion, and ours is a country of festivals. So there is a festival every few days in India to celebrate the seasons, to celebrate the change of seasons, to celebrate the advent of the new season. Because they are all connected with nature, and as nature changes slowly through the year, so do our folk dances, and we celebrate nature in all its glory. The president's limousine, the Beast, now slowly moving out of the airport.
That's the golf dance, also known as ribbon dance. Very pleasant weather welcomes the guest.
Okay, that was the US President Donald Trump, who's just landed in Ahmedabad, and there's another person who's come to India, and that's Microsoft CEO Satya Nadella. Let's listen into what he has to say.
The most open infrastructure again to help it meet the real world needs. But it's not just stopping with the 57 regions. It's going all the way to the edge, right? So when we talk about computing getting embedded in the real world, it's in that hospital that you will need compute. It's in that stadium. It's in that manufacturing plant. And for that, we have really built a consistent edge and cloud model when it comes to development models, deployment models, management, and security. In fact, we're the only public cloud vendor who's sort of had that vision that distributed computing will always remain distributed. And so therefore, we from day one built for what people describe as hybrid. And today, interestingly enough, compute migrates to where data is getting generated, and increasingly data gets generated at the edge. And so that's the computing fabric that we're building. Now, in fact, we see even in India some fantastic examples of people who are already using this. Piramal Glass, for example, took all the IoT sensors and put it throughout their entire production line so that they have a feedback loop for quality control right from where the raw material enters to when the piece of glass packaging goes out, right? So you now think, because of the IoT fabric they have connected to the cloud, in real time monitoring everything. That's a great example. Of course, we have all the unicorns who are cloud native, right? We have Mindtree, who is sort of revolutionizing fashion, hitting records in each one of the seasons in terms of the volume they do. InMobi is taking an approach to advertising, just not in India, worldwide, which is revolutionary. Udaan's built perhaps one of the fastest business-to-business marketplace, all on Azure. So this is another example of how new companies are getting started scaling fast with the efficient frontier of cloud economics, and that's fantastic to see. Now, so that's the first layer of technology. The next layer is the limitless data estate, because when we talk about 175 zettabytes of data, the fundamental need for any data infrastructure is that it's got to be limitless. That means the variety, the volume, the velocity of data you're going to generate is something that you need to be able to handle. And we've built that data estate so that we can scale with your data needs. Think about all those IoT sensors generating real-time streams of data that need to be analyzed. That's the type of infrastructure you will need to provision. Now, of course, the limitless data estate, and by the way, the analytics capability that is real time is perhaps one of the key things, right? If there's one currency going forward, it's your ability to take all this data and make sense of it in real time. That's going to define what happens in the next 10 years. And that's what leads you to AI. If you look at the breakthroughs in AI, perhaps starting in 2014, 2012 maybe, that's when the first ImageNet sort of data started coming out. It's been remarkable when it comes to speech. We set the world record first in terms of the error rates. Same thing around image processing and object recognition. But lately, what has been happening in natural language is just stunning. And this is something that we've been very, very passionate. Has been Bill's, the thing that is always dreamed of is how do I really, in real time, make sense of language and turn it into representation. And so we have really got amazing breakthroughs in both natural language representation, but lately, in fact, just 2 weeks ago, we announced a 17 billion parameter NLG model, which is a natural language generation model, right? You feed it some data, it'll generate. So it's kind of like I could have really done well in GRE if I had this, right? So which is I could have just had it all complete my reading comprehension for me. But it's eerie to think of all the things that one can start doing with this level of natural language capability. But for us, it's not about celebrating any big one milestone from a company like ours. The question is, can we democratize it? Can we make it such that the infrastructure, whether it's FPGA, GPU, whether it's in the cloud, whether it's in the edge, is available like a commodity so that you can create your own AI? Are all the frameworks open? In fact, when we even did the 17 billion parameter model, what we did is we even had something called the DeepSeed library that was open sourced in GitHub so that it's available to the next person who is able to take it and then build on it. Right? So are we making the frameworks and the tool chain around it all such that you can create your own AI? That's the real prize, right? Which is how do you make it easy for anyone to make sense out of data and create their own AI?
Okay. Let's welcome our experts then. Independent investment advisors Vivek, Mavani and Sharmila Joshi join me on the show. Today on Hot Money, we'll discuss what's causing the rally in Mindtree. We get the analyst views on Federal Bank. We ask them for one large cap that they're betting on and their take on the US FDA revoking the VAI status for Aurobindo Pharma. The stock is down almost 15% today. What's the future for Oro and some of the other pharma companies which are stuck in the US FDA limbo? But that's something that we will discuss. The first stock that we want to discuss is Mindtree, and the counter has been rallying significantly ever since L&T has taken over. There seems to be a lot of traction, a lot of changes that have happened. What's driving the stock? Are valuations now expensive? Is it a preferred choice among the mid cap, or would you prefer the large cap bet? So in the last 3 months, it's rallied 46%. What according to you has changed for Mindtree? Obviously, the management has changed, but do you see positive trends coming in post the management change, and should one take an investment bet on Mindtree?
I think it's precisely that when that management change was happening, there were too many concerns as to what could be the road ahead for a stock like Mindtree. So I think it's sort of coming into its own, because I think, in the last 2 years, really, the stock has done nothing in that sense, because there were a lot of concerns built into that situation, that what is really going to be the future. And I think now those are sort of being put to rest. And I think even if you look at the numbers, they were a pretty decent set of numbers. You did see that, you could argue that their dependence on their top client has grown. But, on the flip side, what you're really seeing is that their margins are beginning to look attractive, and overall the outlook is quite positive. So given that, and given the valuation that the stock is at, I would be positive, because I think now sort of things are sort of back to normal, and now you will start evaluating the company more on valuations than any management change or any concerns that were being built into it, for the past 1.5 years.
But what's the trend? Are valuations expensive? Would you prefer Mindtree over some of the other large cap peers that it has, or what's your sense on IT overall?
So overall, my view has been that I prefer large cap. And I think even the stock that large cap I'm going to talk about is HCL Tech. So that is clearly my preference. But I'm just saying that for Mindtree, it has also been the fact that there were so many concerns being built into this Larsen the buying, and the earlier management taking them on, and so it sort of played out for a while in the media. So the stock does take some time to sort of digest all those things, and I think that's the time that this stock has spent, and now it's sort of coming into its own. I think it's a decent stock within the sort of mid-cap IT space. but my preference is for the large cap.
Okay, preference for the large cap. Vivek, I know you've always said that you would prefer the large caps on the IT space, but what's your sense on Mindtree? Have all the concerns now been played over? Is it a good investment bet for someone who wants to take a slightly longer term perspective?
Well, to a large extent, the concerns, I mean, the new management of Mindtree seems to be allaying the concerns that the market community had over the last 2 years, especially so in the last 1 year. But one has also got to put things in perspective that 2 years ago, Mindtree stock price was whereabouts of 1100. It is back to those levels. In between, it fell to 600 when the whole acquisition with L&T and the large stake sale by VG Siddharth of Cafe Coffee Day Group sold his block to. I mean, that block was in the market for a long time, so there was a supply overhang which was lurking, which is what also had impact on the stock price during that period. That was between 2018 and 19. But if we look at the fundamental performance, between 2015 and 17, Mindtree had EBIT margins of whereabouts of 14 to 16%, which actually collapsed to 10% just a couple of quarters ago. So while the stock was grinding and there was a sharp correction in the middle of last year, it was also accompanied by deteriorating performance on margins as well as growth sort of being in a limbo. So actually the company has stagnated for 2 years between 2017 to 2019. What we have now seeing in the latest quarter, December quarter was actually the first full quarter of the new management having taken charge, and there has been some change of strategy. So Mindtree is now, I mean, the new management is more focused on annuity kind of deals, more long-term fixed price contracts, which was never a mainstay of Mindtree earlier and under the earlier promoters and earlier management. So it also sort of brings in more predictability in the performance going forward. The latest quarter also saw margin improvement of almost 250 basis points, but also has to be seen in perspective that there was a collapse of margin over the last 2 years. So it is only now inching back to what used to be the margins 3 years ago or maybe 2 years ago. On a valuation point of view, I think after all the concerns have been allayed, now I think it's gone to the other extreme of too much of optimism being built in. So even if one were to look at a expectedly sharp jump in earnings over the next 1 year, so that is, we are talking of financial year 2021 with an expected earnings of maybe about 50-55 rupees, which seems to be the Bloomberg estimates, I mean range of Bloomberg estimates across various brokerage and investment banks. I mean, it trades at upwards of 20-22 times at current price, versus if we were to look at large cap IT, much more predictability, much more certainty and stability in margins in terms of growth. So at similar valuations, it's large cap IT which is preferred. I don't see much of upside on Mindtree unless they deliver incrementally lot more improved performance in the next few quarters.
Okay, that's the view that's coming in on Mindtree, and we also ask our guest which is one large cap bet that they want to be told across all sectors, but I believe both of guests have preferred bets in the IT space. So and that or two large cap IT names. So Vivek, which stocks in the IT space probably large cap bet that you're betting on?
Yeah, so I continue to bet on Infosys and TCS. Infosys being the most preferred. I mean, trades at serious discount to TCS, but TCS has been far more consistent in the last 5 years, quarter after quarter, in terms of growth, higher return on equity, higher payouts in terms of dividends versus Infosys. While Infosys has done buybacks, TCS has paid more dividends in terms of actual payout out of the profits. From a valuation point of view, Infosys at about maybe 16-17 times earnings, with maybe about earnings growth of 12 to 15% likely over the next 2 years, which can be a safe assumption. I think Infosys would do reasonably well. TCS also, not to say that any inferior. Valuations are about maybe 24-25 times earnings, quite in line with what it has been in the last few years. But So I'll prefer both Infosys and TCS. By the way, both of them, given their dividend payouts, trade at about 3% dividend yield now, which for nifty stocks, which for the large cap universe, 3% dividend yield also gives you a certain margin of safety. Probably it's also among the highest among the nifty stocks in terms of dividend yield.
Okay, so TCS and Infosys is something that you preferred. I believe HCL Tech is the stock that you preferred. And you've spoken about this. Do you still are positive on the counter?
Yes, and I think one of the reasons why you would want to look at IT is that, on certain sectors you have that whole coronavirus / China overhang. So you're very unsure whether you should be looking at like a metals or, how positively you should be looking at that space. And some of the other large caps have had a significant run up, but there you have certain internal concerns with consumption and how the story is given, where your macroeconomic numbers are, how things will pan out, say for the auto space or whatever, So there are attractive stocks across sectors. But I think from a safety perspective, one wants to go with IT at this point in time. And yes, numbers for all three have been good. And the reason I prefer HCL Tech out of the three, Infosys, TCS and HCL Tech is the valuations, A. And B, I think that IBM purchase is now beginning to show in the numbers in a positive way, and I think they can certainly build on that, which is why HCL Tech.
Okay, that's the view that's coming in on IT. So I think IT seems to be the preferred bet that our guests have been speaking about. The other stock which is interesting, and that is Federal Bank. Of late, a lot of brokerages have come out with the notes on it. One of them was an initiating coverage that came out with a target price in excess of 100. But the counter seems to be very range bound from levels of 80 to 100, and that's the range that it's been moving for the past so many years. But what's the view? Will Federal Bank be able to make it up to the larger banks, or will it continue to stay the bank that it is? Sharmila, Federal Bank, what's the future? It's been very range bound. Stock price hasn't moved much. It moves between 80 to 100, probably. That's the broad range. But what's the next step? Do you see Federal Bank moving up into the big league, or will it always stay at the level it is?
I would think that it will stay at in that range of 86 to 100, and I think the results etc. are okay. I think there will be some amount of concerns on maybe the exposure they could have to some of the trouble sectors. Telecom could be one pain, and maybe other names could pop up, but that is no more or no less than anything that is happening in sort of pure stocks across the banking space. So again, over here, my overall approach has been to go with the large cap banking names, and within that, really speaking, HDFC Bank and ICICI Bank. So I've really steered clear of any other sort of banking name for these past 5-6 months. So I think it will continue to be.
What's your sense on Federal Bank? If someone wants to take a long-term perspective on Federal Bank, is it a bank that you should have in your portfolio?
No, I don't think so.
Any reason why you would?
Because I think the concerns are such that I think that if you are going to see stocks sort of banks sort of start doing well from here, the chances are that the larger banks will start doing better first. So which is why your exposure should be to the larger banks, whether it is an HDFC Bank or an ICICI Bank or a Kotak Bank or an IndusInd Bank, that Axis Bank maybe even. Because all of them have exposure to troubled names, all of them have exposure to core sector lending. Like you always hear that in the case of, say for instance, Axis Bank, that their core sector book is large. The corporate tax saving that they're going to make will have the biggest positive impact on the larger bank. So I think a lot of factors point out to the fact that a larger bank could be a better phase sort of to do. When things start improving, they'll do better than some of the smaller banks. So I would really just avoid this space altogether.
Okay, Vivek, would Federal Bank find a part of your portfolio, ever be a part of your portfolio, at least in the current form?
Well, in the current form, certainly not, for 3 reasons. One, I'll concur with Sharmila that when your large banks, whether it's HDFC or a Kotak Bank or ICICI Bank, even Axis Bank to a certain extent, it seems to be getting a lot of their problems sorted out. I mean, when your large banks are going to deliver earnings growth in the vicinity of 15 to 20%, why do you need to go with a Federal Bank which has, although been a steady, consistent performer, but with much lower growth? So your average growth rates for Federal Bank have varied between 10 and 12% on an annual basis. On the higher side, it will be probably 15%, which is still lower than what your large banks are delivering. Now, for a smaller mid-sized bank, one would have, on a smaller base, expected larger growth, but in Federal, it just doesn't seem to be coming through, number one. It's a Kerala-based bank, derives a substantial amount of deposits and advances from Kerala. It's been trying to diversify for the last almost 10 years, but with limited success. So it is probably, even today, not just probably, actually the numbers speak for itself. second largest bank in Kerala. 17% of Kerala's banking, whether it is in terms of deposits or advances, it's next only to SBI. SBI is probably close to 25 to 30% range. Federal is about 17-18% of Kerala's banking and is the second largest bank there. So it's been trying to diversify out of Kerala, out of South India. South India alone is like maybe more than 50% for Federal Bank. Now to have a strong regional bank, I mean nothing against it. But the fact is, trying to do that should lead to acceleration in growth, which itself is not happening. So if we look at some of the newer private banks, the types who received their banking licenses in the last 5 years or so, they've been growing much faster. They've been able to diversify out of their core regions or core states from where they originated, which Federal apparently has not been able to do. It's always traded in the last 10 years at a steep discount to other banks. I mean, even now it's trading at about 1.2, 1.3 times price to book, which is a steep discount to other private banks, but also the discount on ROE. Correspondingly, even ROE of Federal Bank has been about 11-12% all through last few years. Even on an improvement, nobody is really, including the management, factoring even 15% ROE in the foreseeable future. So if the ROE is going to remain in the vicinity of 11, 12, 13%, 1.3 times book also seems reasonable. What can change in this? It's been touted as a attractive acquisition target for last many years, but obviously nobody seems to be coming forward and wanting to acquire. So something like a CSB can happen. I mean, CSB, by the way, was acquired by Prem Vatsa's, acquired 50% in that. It led to a sharp improvement in the subsequent to the acquisition. Now, can that happen? Well, very much possible. Maybe we can review it. So as your opening remark mentioned, that in the current form, is there anything attractive in Federal Bank? Not really.
Okay, that's the view that's coming in. And the final question is Aurobindo Pharma. We'll slip this in. Obviously, very, very shocking news coming in terms of the 20% rally and then the revoking of the VAI by the US FDA. The counter is down 15%. What should one do with Aurobindo Pharma? Does this have a negative impact on the pharma space? Vivek, what's your sense on this one? What did you make of the entire chain of event? And now does Aurobindo, after this 15% fall, become an attractive bet?
Well, I wish I could make anything out of what happened. I mean, out of all the drama that happened last week, I wish I could understand. I failed to do that. But if I were to look at not just Aurobindo, I'll come back to Aurobindo, but every Indian company which has had issues with US FDA have had earnings suffer, and as a result have continued to go through bad sentiment, and that doesn't seem to be improving. There doesn't seem to be any clarity whether the issues with US FDA as far as Indian companies, I mean, is that dark cloud ever going to go away, at least in the foreseeable future? No clarity on that. But meanwhile, so from an investment point of view, Aurobindo clearly is an avoid from a long-term investment point of view. But from a trading point of view, I mean, Aurobindo makes attractive trading bet. I mean, it trades in a very tight range of maybe about 450 on the lower side and maybe 650 on the higher side. So for a trading bet, buy less than 500 and sell around 600 or higher than 600, and one gets maybe 1 or 2 cycles every year, or maybe if you're lucky, maybe three cycles a year. I think so from a trading point of view, one can keep making those 15-20% if one is lucky enough. But from an investment point of view, certainly no trade over there.
Okay, and what's your sense on Aurobindo Pharma? What did you make of this entire event?
Probably you're in a better position to tell us what to make of this, because honestly I have not seen anything like this. In all the years that I've read news for pharma, I have not seen US FDA go back and say that, no, first say yes, then say no. This kind of flip-flop, I mean, it's just, it's a very, very strange set of circumstances. So I think the stock needs to digest that, because obviously it went up 20%. Everybody received the news so positively. Everybody put out a buy report, and then bam, in the evening you get a note that says that no, it's still we're still holding that thing. So I think the stock needs to settle down. Numbers, etc. was okay, but I'm neutral, because I think there are multiple concerns for pharma, as Vivek highlighted. One is the whole pricing pressure in the US. Most companies are trying to diversify into specialty chemicals or something else, or other geographies that give them better numbers. But none of it is really coming together still for pharma as a space. I would be neutral. Okay, so that's the view that's coming in on Aurobindo Pharma. But with that, it's a wrap on today's edition of Hot Money. Sharmila and Vivek, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg.